Okay, we go to the Ichimoku lines cross topic. Okay, what I said was about the cross of these two lines, and they're like caught each other. There's like a cross here, forms here. When there's something like this for you, it's giving you a warning that there's going to be a change in trend. And before the price can get above the Ichimoku, it will give you a cross. So this is the first warning that the trend is going to change. You may ask that, like, what is the use of it? All these crosses are the first warning that tells you that the trend is going to change. Means the downtrend is going to become uptrend. Let me put the time frame of the chart higher so you'll see more of the chart. Okay? Let me zoom in. Here. In this part, exactly, the cross has been made here. This has been formed a cross. The blue line has gone straight, and the red line has like passed through the blue line. Let me make my red line thicker so we'll see better. It's better now. You see, the red line, the candles were on the top of the chart, like on above the cloud. We had a up signal, but here there is a cross, and the red line is under the blue line. This is the first warning before price can break through the cloud. Gives you a warning. Like it may want to change the trend. Or in this part. There is a crest here. The lines have caught each other, and the red line has become from like upper hand go under the blue line. When you look at it, you see that the trend may gonna like change. Okay? And another thing, like here. There's this cross. Two lines have cut each other, and the places of the lines have changed. It's given us a warning that the trend is going to trend, and it's going to change the trend, and it's going to go upwards. That's where we know that these crosses let us know that the trend is going to change. When this blue line, Kijisen, is under the red line, it shows you that the trend is uptrend. You should really pay attention to this. When there's a cross, you should see it, and according to the rules, you should like perform or act. You see here, these lines are going straight downwards. Now here, when the red line goes upwards and the blue line goes downwards, there will be a cross, and it gives us a warning that the trend is going to go upwards. Let me show you the past of the chart. Like here. You see there's a cross here. They have cut each other. The blue line is above the candles and the red line is under them. And my trend from uptrend has become a downtrend. Now if it wants to like become an uptrend again, there's exactly a cross here as well. Exactly here. and the red line has become upwards from the bottom, and my blue line is above the red line. This is a cross topic. Okay. If these two are in a flat position and are on each other, let me find somewhere more clear. Like here. Exactly in this part. The two blue and red lines are like moving on each other. And there's nothing like exact and precise, and they're on each other. You should expect an intense signal here. So whenever you saw these two lines are on each other, and they're going in a straight line with each other, and there's no cross, you should expect a really intense signal that our trend will have an intense moving in the future, either upwards or downwards. When can we know that the trend is going to be upwards or downwards? According to that candles that are under the cloud or above the cloud. And besides the cross also gives us information about it. What we had here is like this as well. Something the same has happened here. You see here, exactly here, these two lines are like flat and are on each other, and a little downwards they have separated. Again, they're on each other, and here the blue line is flat and the red line has gone upwards, and from the upper wall it broke through the blue line, and the trend intensely gone down. So we should really pay attention to these flat lines of the two red and blue lines. Okay. We go to the next rule. Like for example, there's a cross from me here. The red line has gone up and the blue line has gone down. There's a cross. And my trend is an uptrend. Like I have got the warning that my trend is going to be upwards. And the 20% our uptrend is confirmed. Now, when these two lines, if they break the pivots, like I have one pivot here. Right now, if my pivot breaks, how much will my trend go upwards, until the bottom line, the bottom wall of the cloud here. It would be like this. You see here, the candle is above the cloud. There's a cross here, and they have separated here. My Chico span has broke through the cloud and gone above it. We can have a buy position from here until there's a cross again. Like there's a cross again here. They're on each other. I'm sorry. They're not. There isn't a cross. It has gone up and up. Here, there's a cross. There's a cross exactly here. The red line is going down, and the Kijinsen or the blue line is going up. And there's a cross. Like, we imagine that the candles are under these lines. It will go to the cloud, the wall of the cloud. See how thick because of the thickness of the cloud, it didn't let the price go down. It's all in the walls of the cloud. It has gone going inside it and gone outside again, and then it could break, like make a breakout in the cloud. And then, like here, when my price goes into the pivot and wants to go down, it will come back in the wall of the cloud. Like here, it will come back in the wall of the cloud. My trend is moving downwards. There's like a cross here, and the lines are on each other. There's the cross form here, and has gone down, and here has gone up again. There's a cross here as well. The price has gone up and has hit the wall of the cloud and has gone down. What I mean is, when your trend is under your cloud, you have sell positions and you have open in a sell order, and you may hit your target even. If you want to enter here, according to other analysis, it gives you an uptrend signal. You can open orders until this wall. It shouldn't, the order that is in the profit shouldn't come back and go into negative or zero. Okay. So it got, let me zoom out. You see the walls exactly? The walls are kind of a resistance. And what kind of it? They're like a corrective wave of a resistance. You have two kinds of pivots. One is the cloud, that is for the continuing of the trend. And when the trend is getting a corrective wave. Here exactly, it gives us a corrective wave, and it's upwards, and it will hit the wall of the cloud and it will come down. Like I have drawn the Fibonacci, for example. Okay. I have drawn the Fibonacci here. My 38 of Fibonacci hasn't been broken. It has gone up. When we got an uptrend above the 38, it will go until the wall of the cloud. And it may depend that if it gets sideways or not, or it will go up. If it gets confirmed here, it will go up until here and hit this wall, and then again comes down. So, like, we have two pivots. One is the cloud and Kijinsen, and the other one is the wall of the cloud. Okay. Sometimes these candles of mine, my trend was downtrend, the price was under the cloud, and the lines are under the cloud, but my candles are between these two, between these lines and a cloud. Here you shouldn't trade. When it's like this, you shouldn't trade. Like the one I showed you, for example. Let me find the example for you. You see here, my trend was an uptrend, and my candle between these lines and cloud are like there. You shouldn't trade there. you should wait for the candles to go above the lines, or even breaks our cloud and and the candles give us a down signal completely. Let me show you another thing. Like here. No, not here. There was a cross here. The price was going towards the wall of the cloud. Okay, here exactly. This thing that I'm telling you is for the sideways form of the market. And it happens close to my wall of the cloud. The candles get formed inside the cloud and the lines. You shouldn't trade here. Exactly like here. My candle is above those red and blue lines. It kind of happens always in the sideways form of market. Okay. And the next thing that is really important, when my trend is downtrend, my candles are really further from the wall of the cloud, you should expect the price to go back here in that zone. Like here, my trend is going upwards. I don't imagine we don't have this zone. My candle is really further from from the cloud, and see how much it has gone down. There's a really intense drop. So whenever the candle gets further from the cloud, there's going to be a drop. You look here, it's really further from the cloud. And it's intensely when the cloud attracts the trend. Like here, it has happened. The price has gotten further from the cloud, and we should expect to come back from here. Or here, my price has gotten further from this, but we had a pivot as well here. It has done something like this in here. My price has gotten further from it, and suddenly the cloud has activated its attraction and made the trend go down. Sometimes to get consistent, and the other red one gets further from the candle as well. We should expect to come back here as well. Like, I don't have a really long distance between the candles and the further, and my price is kind of near the cloud. When it forms like this, my candles are there, and my cloud forms like that. It will activate its attraction and makes the trend go upwards intensely. Let me show you in other charts. Like, my price has gotten further from the cloud here, and there was a pivot as well here, and it has gone down again. It will go near the cloud here. How can we know sooner? You may ask that this distance is the same distance that makes a comeback. I should go and see the main and central pivots, the more powerful pivots. Like when your blue line and your cloud is in the flat line together. Or according to the highs that there are central pivots there, you can guess it. Like here, my price is further from my cloud. It didn't come back upwards because there was no powerful pivot in its way. This only happens when the price goes into a pivot. And we should expect to come back here. So the distance between the price and the cloud, how do we know that it's the same distance as a comeback? We should look at the pivots that are more powerful. Okay. We go to the next topic. Sometimes you may ask that when my price breaks through the cloud, what should I do? Legally, according to the rules, we shouldn't trade when the price breaks through the cloud. You may not be aware and trade here. Let me show you somewhere that is more simple. Like here. When my price breaks through the cloud, means that my price is inside of the cloud, I should expect it to hit, like the price would hit the other wall of the cloud. And again, it will come back until the other wall on the up. Let me show you another example. Like here, the price has gone through the cloud. There's something like a cross here. And my Chico span is also in the cloud. We expect it to go down until the next wall, but it didn't. It's 70% possible. So the best kind of thing that you can do is to not to trade until you got the complete and full confirmation of a down signal by other analysis tools. When you got the confirmation from them, you can trade inside of the cloud and put your TP on the other wall of the cloud. And another example. Here. You see my price has broke through the cloud and has hit the lower wall and has gone up again. That's when we said that it will go up again after hitting the wall. It couldn't hit the break through the wall exactly because you should have two candles inside of it. Like here, the price has gone through the cloud, and the next candles have been created outside of the cloud. And this is our next topic. You see exactly here. It was a good thing, but it's gone away. Here my cloud has been broken through. The price had gone the upper wall and then the lower wall and then the upper wall and then gone down. So when my price is inside of the cloud, I should not trade. Or even if I want to trade, I should get a full confirmation of an uptrend or a downtrend And when I got the full confirmation, I can trade. And on the next wall, I announced my target and I closed my order with profit. Okay, you see here, the wall has been broken. It has broken through the cloud and it's under the cloud right now. There's a cross here in these lines. There was a stop here. There was a relax like here. And then again, the candle started working, gone up. You see here. So when your cloud is completely broken, you should expect 70% for the price to go down and hit the other wall, the lower wall. And the same like this, the lower wall has gone up and again hits the lower wall and has been gone out. Here the wall is broken until downwards. There is a stop here and again gone outside of the cloud, and the pivot made it to drop down. And my lines, the red and blue lines, are under the cloud. You could get a sell position here, but you didn't have a full or final confirmation here. We could get a good and successful sell position here. Okay. We go to the next topic. Okay. Someone told me, like, why somewhere of the cloud is thinner and somewhere is more thick. You see, sometimes when your cloud is more thin or thinner, you should expect the trend to get a reversal. Even if you're in a 30-minute time frame, you should expect the whole trend in the 30-minute time frame to change. Like, my uptrend wants to become a downtrend. There's a really thin cloud here and also here. And my price has gone outside of it, upwards, has hit the pivot, and again, like, dropped down, and again, gone upwards. So, these thin clouds, what warning does it give us? It gives us a warning that the trend is going to change. How can we confirm these like thin clouds when the candles are under the cloud and my two red and blue lines are under the cloud as well? You can confirm this trend reversal and trade with the Chico span. And whenever we look at it in the chart, there is some thin lines here and our whole trend has changed and has gone to the opposite direction. So these thin clouds are a warning for a reversal in trend. You see here, like sometimes like this, the present of our chart. So many times we have this kind of thing. The price has gone down. There's something like this always happens. The price goes down, and my Kijisen are like the same on the above. And the red line is swinging with the like a candles. It's like a hunting dog that wants to get its hunt. When my price gets further from the cloud, I should expect the price to go back. How do we know that it's going to get performed? One, according to the powerful pivots that we should see the pass of the chart for, or the Kijinsen line. It has gone further from these candles. Like the candles are above these blue line. And my red line is above it, or above the candles. Here, you should expect the price to go downwards. This hunter dog wants to get its hunt. And another thing, let me repeat this again. You see like this. Here, that my taken sen is getting further, but it was about the news. When a news gets announced, they will be delayed, these two lines. Okay, here my Kijinsen and my candles were here. You see exactly here. Let me mark it for you. My candles were here, and my Kijinsen was on the bottom, and Tekensen was above the candles. Your line must be flat. Your Kijinsen should be flat. That's where you know that there's going to be a corrective wave for the price. You see here exactly? Like our chart. My chart is relaxing right now. My chart is swinging right here. It couldn't go more up and down. When my Kijinsen line gets like a flat line, I should expect my trend to be sideways, and there's going to be a corrective wave for it. When this flat line gets created, we should expect the trend to go upwards. But usually this doesn't happen. Like my candles are like a flat line here, but you see that it didn't happen here. It went down again. It's like a flat line. When it's a flat line, you know that there's going to be a relaxing thing for the price and get a little corrective wave. Look, my price was up. My Kijinsen line gets like a flat line. There's a little relaxing, and there's a corrective line here. Okay. This thing that I told you is really important. Definitely use it. Like you get a sell signal here, but your Kijinsen is above the candles and is like a flat. Don't trade here. Let it go get the corrective wave, and then start trading. Yeah, there's one here as well. Exactly, my price was above it, and Tekensen is swinging with the price. I repeat, when your Kijinsen gets further from the candle, and Tekensen is with the candles, or either above it or on the candles. We should expect the price to go back. There's another example here. There's like a flat line. My Tekkensen is swinging with my candles. We expect it to go sideways. That's a relaxation of the chart. And another thing, yeah, about that square that gets created here. And it's really important, really important. We can have the best trades in them. You see, my trend is like going from the bottom to top, like above the Ichimoku cloud. And my red line is also going above, like upwards. And there's like a flat line. It's not really clear here, but for a good trade, we should have a really good flat here. When there's something like this here, you should like wait for a cross. It may, like, the lines will be on each other and then get further from each other. Because we didn't have a flat line here, it doesn't work here. There should be a cross here, and then you can know when there's like a candle, like a shape like this. Let me find for you the exact shape. Like this. You see here, there's a flat here, it has gone down, and this one has gone down as well, the candles, and there's a cross here, you see? When this cross happens, you should expect an intense trend, upwards or like downwards. If it's under the cloud, a downtrend. If it's above the cloud, an increase in price. You should have an intense swing, like a drop or an increase in the trend. Let me see where I have it. Maybe I don't have it in this chart. Okay. Not this one. It has a little error in it. Let me find it in other charts because it's really important. So I want to tell you. Exactly here. There's a flat line. It has gone up. There's like a square here. And there's a cross here. When there's a cross here, means there's going to be an intense swing here. It has dropped. There's going to be a corrective wave here. When there's a cross, you should expect it to get a corrective wave and then an intense swing, upwards or downwards. So there's a square, and there's a cross. The trend had a corrective wave, and then suddenly gone up. It gave me a profit of 114 pips. And here it's like nearly formed here. There's a cross here. And the trend has dropped down intensely. Here. This is a good one. It's really... Oh, it didn't gone away. You see here, there's a square formed. It's not that bad. You see where, let's see where is the cross. You see here, not here. Where's the cross? There's a cross exactly here. And when there's a cross here, you see that how intensely it has dropped. After that square, you should look for a cross. Like when there's something like this, you should wait for a news that gets it to like have an intense swing. There's something like this here as well. We had one flat line here and a flat line as well, also here. It's sideways, but I can make an example of this. Here, there's a cross. When the cross has been made, see how intensely it has gone upwards. Okay? I've seen something. Oh, okay, here. This is really good. It's a really good example. There's a really precise square here. Here's a cross. Exactly. The two lines are moving within each other. And see how intensely it has gone down. And then it has gone up and then has gone down again. You see? Here, the swinging of the market is a lot. So, for like teaching you better, when there's a square like thing in the Tijinsen and Kijinsen, you should expect a really like, and the cross afterwards, you should really expect a intense drop or increase in price in the future. Like for example, here, my candles are above my cloud, and there's a cross here. My Chico span is upwards, above the cloud, and the color of my cloud is changed. And I should see if there's a pivot in the way or not. There's a pivot here that the price has hit it and has gone down. And there's another pivot here. I can have a buy position here and put my target according to the pivots that I found. Okay. And I can put my stop loss according to the pivot that has been formed. I should put it. Like here, my TP is more. Like I should put my stop loss in a way that is in a safe place. Like not in the way that the price will hit my stop loss. Like here, my TP is like less than my stop loss, but I would leave my TP there. Is it true that it's less than the stop loss? But my trade or my position will be closed with profit. But if you put your stop loss like less than the TP, it will be closed with negative and loss. This is enough for this session. You will be tired afterwards. Next session, I will tell you some points about Ichimoku, and there will be no problem in Ichimoku anymore. I will talk about the time period of the Chicken-sen line. It has a 21 days, and it can give you, like, it's a time analysis kind of, and can give you the future of the market. We can have the more powerful pivots in the cloud. Like when I don't see any pivots here and my trend is downtrend, I can identify